us now for an exclusive interview. Welcome back to the show, President Bullard. Good to have you.
Glad to be on.
Inflation is the question du jour, and it is causing a lot of angst on Wall Street right now. How do you interpret these moves we're seeing in commodities and inflation expectations that's spilling over to the NASDAQ and now the broader market?
I do think we're going to see more inflation in 2021. I'd say maybe 2.5% to 3%. Reading it right now, we're certainly hearing a lot of anecdotes from our business contacts about supply chain disruption and other increases in prices, commodities, as you just mentioned. So I think we are going to see some inflation. Then I expect some of that to hang on in 2022. Maybe 2.5% in 2022. So part of that is the Fed's strategy of being less preemptive than we would have been historically, because we're trying to make up for past misses of inflation to the low side of our inflation target.
So it sounds like you're in the transitory camp. I'm trying to feel out where you are on the transitory scale. How likely is it that the Fed would have to move?
It's a good question. So some of this is transitory, but not all of it, because part of what we're trying to do is get inflation expectations cemented at the 2% target. They've been slumping down below target over the last decade, and we want to reinforce our inflation target. So we want to get inflation expectations up. 5-year break even has been trading somewhat higher here, but not at such a high level that I'm worried about it. But I do think it's encouraging for the Fed's policy that we will be able to get inflation up and over 2% over the next 2 years and allow it to be there for some time.
How big a swing factor, President Bullard, for the level of transitory nature of inflation is vaccination rates? And if we get above expectations, does that suddenly mean we're in a worrying outlook for inflation?
The vaccination process seems to be going pretty well. I would say a good baseline model to have in your head is a technology adoption model, which is always S-shaped. Whenever you see those curves, they're very slow at the beginning, then they rise rapidly. And then it's very hard to get the last part of the technology adoption. That's what's going to happen with the vaccinations here. But nevertheless, I think it's going very well in the U.S. Fatalities are coming down dramatically. Confirmed cases are down dramatically. So I think that bodes very well for the U.S. economy and our ability to reopen and put the pandemic behind us. Not as good in the rest of the world, as you know, but going very well in the U.S.
Which brings us to the jobs question. Today, we got data showing 8.1 million job openings, a record high. We've started to see wages move up, so there's clearly demand for labor, and yet April's jobs report was disappointing in terms of the number of hirings. Why do you think that happened?
I think it's just a little bit early to really expect a big jobs growth. You've got the pandemic not quite over yet, not everybody vaccinated, still at risk out there. It strikes me that for a low-wage worker that's been disrupted, it's not that great a proposition right now to tell that person or ask that person to come back to work. So I think we're still in the woods a little bit here, but that'll all clear up. This economy is growing very, very rapidly, well above trend growth in the first quarter. It looks like the second quarter, people are talking 8 or 9% at an annual rate. For all of 2021, I think we'll see very rapid growth and continued above trend growth into 2022. So all of that looks very well. I think the labor market will be very strong. And even today, I would say you can make the case that the labor market is very strong. If you look at the unemployment to jobs openings ratio, which is a popular metric of labor market tightness, that's actually at just above one of the lowest readings that we've seen, and certainly as good as you got at any time in previous expansions for the most part. So that gives you maybe a better picture and is more consistent with what firms are telling us, which is that it's pretty hard to hire workers in this environment.
I'm just trying to read into some of the things you said there. Do you accept that an aspect for why those jobs numbers were disappointing was too generous fiscal policy, but that you're not too bothered by it because it will be temporary and it will tail off?
I think it will tail off. I do think that affects some people's incentives about going back to work, and also, Congress isn't mindful enough, in my view, about the differing labor markets. Rural labor markets are very different from urban ones, and some cities are more expensive than others, and they've kind of got a one-size-fits-all supplemental unemployment insurance policy. That plays very differently in different parts of the country and incentivizes people very differently. So that's a factor. It's not the only factor. You've got child care issues and other issues that people have talked about. I think there's still some fear of the pandemic itself, so that's also a factor.
So are we ready to have the taper talk? Are you ready to have that talk? Have you seen enough substantial progress in the economic recovery?
I'd like to get out of the pandemic more solidly than we are today. So I'd like to see these metrics on fatalities per day and confirmed cases go even lower than where they are. I'd like the CDC to come out and tell us that they're more comfortable than they have been. So we'll see if we can get to that point. But I don't think you really want to change policy while you're still in the pandemic tunnel, even though you can sort of see the end of the tunnel. We're not there yet, and we got to push hard to get all the way to the end.
Shepard Smith here. Thanks for watching CNBC on YouTube.